We're doing an interview today that we believe will help you, giving you tips, tricks, and little tidbits of information that are going to help you if you are deciding to go on the home buying journey or even listing and selling your property. I'm Joey Stanbury. I'm top 2% in DFW real estate. I have helped over 300 families in the last 5 years, and I'm excited to help you today.
I'm Todd Holman. I'm a mortgage broker, and I've helped hundreds of families over the past few years not only buy a home and realize the American dream, but build wealth through real estate.
So stay tuned. We are excited to give you this information today. Talk to us about grant programs that a buyer could take advantage of.
So there are a number of, we call them DPA programs, down payment assistance programs. Some of them are income-based. So the line I always like to tell clients is, the good news is you make a ton of money. The bad news is you make too much money to be approved for this down payment assistance program. They're really meant for people with, on the below 50% in some cases, the median income. Sometimes it's less than 80% of the median income.
Wow.
There are grants which the money's just given to you, whether it's 3.5%. Some say you have to have an FHA loan. We'll give you 3.5%. Here's your interest rate. That interest rate is above market rate. There's no such thing in the world as a free lunch, as you know. Mm-hmm. So if you're an investor, if you're a company giving out money for down payment, you want to recoup that money in the form of a higher interest rate. So your monthly payment's going to be higher.
Yeah.
Okay. On the long term of those programs, some even state that you have to stay in the property for a minimum of 3 years. That company wants to recoup their full investment in you plus a profit.
Yeah.
And if you sell the home within 3 years, they haven't done that. They haven't seen the returns they're looking for. So they require you then to pay back the entire down payment amount that you received at the time of closing. So essentially you were there to borrowing the money at an inflated interest rate.
Yeah.
Which.
So again, somebody's going to get their money back. So it's just a matter of time.
Yeah.
So it's either.
If you stay in the house after 3 years or longer than 3 years,
then you don't
then that money's forgiven. Yeah.
Okay.
And you can refinance after that.
Okay.
At your 37th month, you can refi.
You then pay your mortgage on time. You've got your debt under control, so then you refi for a lower rate.
Maybe go from an FHA to a conventional, have a lower rate.
So hey, that actually it brings me into something I didn't even think to ask you. But if somebody's in that boat and they're like, "Hey, I want to refi, Todd. We've had the loan for 3 years. We're coming up on our anniversary, 3 years. Mm-hmm. Can you get me into a different loan, or maybe the same type of loan, but refinance where my credit's better, everything looks better, I can have a lower interest rate?"
On a refi, there are closing costs. If you refi, typically the largest savings in a refi happen actually, take down payment assistance programs out for a second, okay? Let's just say that rates are what they are right now. You're at 6.5 on a conventional. And let's say the Lord here, we're in a beautiful church, parts the clouds and says, hey, we're going to drop it to 4% in the next 12 months, okay?
Woo!
That would be great. That would be great.
That would be awesome.
So the biggest savings in a closing cost perspective would be from the title company, actually. Because if you refi within 12 months, the chances that somebody will come back in that 12 months and lay claim to the property, the title on the property, are slim to none. So they actually will cut the title fees by up to 50%.
Okay.
In my world, it's about $3,000 to $3,500 to refi just your typical home in the Metroplex. $300 a month by refining, it's going to cost me $3,000. Well, that's 10 months. In 10 months, I'll be actually saving money.
Yeah.
Right?
That's good.
That's less than 2 years. Go ahead and pull the trigger. And then if rates keep dropping, you do the math again. And I've had people refi every 6 months, multiple times, because the rate years ago just kept going down and down and down.
We need to see that right now.
I know. I agree with
So
that.
if somebody's listening, they could push the button to make that happen.
Yes.
Why don't you just go ahead, drop the rates for us? Our lives would be easier, and our families would be way happier.
Our wives would
Yes.
love us even more.
Yes, even
That'd
more.
be great.
Hey, if you're enjoying this interview, please take the time, subscribe right now. Don't wait. You got to do it right now. What are some of the factors that go into decisions when a lender or a company is deciding to give somebody a rate?
Three most important aspects of a borrower's financial picture are income, credit, and assets. And the right combination, and everything's always on a sliding scale, can get you approved or denied. So quick example, you have a debt to income ratio that's really tight. You have an okay credit score, let's say 700, 680, 700 range, but you have a ton of money in the bank, which we call reserves in the industry. So let's say you have 12 months of your mortgage payment, whatever that's been calculated to be, $3,000. So let's say you have 36K in the bank. That could get someone approved versus someone that has $3,000 in the bank, 1 month of reserves. Because it's all about what is the likelihood that that client, that borrower, defaults on his loan. And the more aspects of the financial picture that somebody has that check a good box versus a bad box, if you will, the more likely they are to be approved. What is a crazy story you can tell me about someone's credit score?
In 2011, unfortunately, had a unfortunate events in our life, and we foreclosed on our house. We were 20 years old when we bought our first house, so very young. Didn't take the lender's advice to hold money back for taxes, got in a little bit of trouble. It snowballed, and we ended up having to foreclose. Our credit score stumbled all the way down to, mine was 480. Like, I talked to lenders, and they were like, yeah, the lowest I've seen is 500. And I was like, well, I'm the worst out there then, because it was 480. So at that time, I was like, I got to figure out a way to increase my credit score. And I was getting ready to buy a house. It had been almost 5 years, and 5 years after foreclosure, we can go back on the market, see if we can buy something. But we still had the credit score issue to deal with.
Sure.
So I called my lender at the time, and I said, hey, I know my credit score is going to be bad, but Credit Karma says it's like 575, so I don't think I have too much work to do. He said, well, hey, let's run the numbers to see. So they run the credit scores, and he calls me, and he sounds so defeated. And I'm like, Jeff, what's going on? And he said, well, it's bad. It's bad. Like somebody just passed away. Like it was that bad. Like, what in the world? And he said, man, your credit score is a 487. And I'm like, wow. And that was the moment where I was like, holy cow, I have not seen a buyer. I've been in real estate for 5 years. I've helped many families buy houses. I have not seen or heard of a buyer with that low of a score. So that was super low. Now, I will tell you, my lender at the time held my hand, which I know you would do. He held my hand, and he said, hey, we're going to get you to where you have a higher score, and we can get you pre-approved. It took about 6 to 7 months, but we started with, and if you're thinking about buying a house and you have a low credit score, look into a secured credit card. I'm not a financial advisor, so I'm not giving you financial advice. However, what helped me was a secured credit card. I got a secured credit card through a bank, and the limit was $250. I gave them $250. To give me a credit card. So I gave them $250. They gave me a $250 limit credit card, and I, for 3 months, went and spent money, paid off, spent money, paid off. Didn't go above 33%, and I paid it off and paid it off and paid it off every month. Well, before too long, my credit score was right at a 6, almost a 6, and then I ended up getting it in about 8 months. I think it was the whole time was 8 months. I got it from a 487 all the way up to a 620, 626, something like that. So yeah, I know that I was secretly probably being judged by this lender at the time, because he's like, man, what on earth did you do to get a 487 credit score?
Something else you could have done that a lot of people don't know about, you can self-report your bills. You can self-report your cell phone. You can self-report your rent to the credit bureaus. And that then creates a history and a track record of you paying those on time every month. And that will accelerate the climb of your score. Time out. Yeah, what?
So I've never heard of this.
Yeah.
Like, this is news to me.
And it shows up on your credit report. So when we have that initial conversation, we're pulling credit, we're looking at it, it pulls into our system all those self-reported line items. You know, your car, your credit card you have, and then your self-reported rent, your utilities, electric, water, garbage maybe. I haven't seen that one yet, honestly. And then what I do is I go through and I omit those payments from your debt ratio, because if it's self-reported, we don't have to include them as a lender. But it boosts your credit that much faster. So instead of one payment that you're paying on time every month.
Yeah.
That's being reported. Now you got 3, 4, 5, 6. They're showing a monthly payment in full on time.
And it's self-reported.
You are reporting it. So it takes some time, it takes some commitment from you.
Yeah.
But if you're serious about buying a home, getting out from under a rent payment, it's well worth the time and effort.
What's the most outlandish reason someone's loan got denied?
Mine is buying a house very close on the debt-to-income ratio, decided to celebrate before closing with going to Nebraska Furniture Mart and buying all new furniture, big screen TVs, pool table for the home. And I always tell people, do not buy anything before closing. Once you sign the paperwork and we are funded and you own the house, go crazy. I don't care. It's celebration time.
Yeah.
But if a transaction's taking longer, if just here, quick point to note, credit pull lasts 4 months. So if we have our consultation, we've pulled credit, and a buyer takes a long time to find a house, and that 4-month time period expires, I have to re-pull credit. And if something is on that new report, a Nebraska Furniture credit card, for example, with $23,000, that then goes, I have to account for that payment. That is outlandish, not the worst though. I have heard of a lender who had a client who, before closing, celebrated their new home with matching BMWs.
Oh, no.
So there are some crazy ones out there.
Man, so mine's not that bad. I represented a client, and this is when I was early in real estate. I probably my first or second year, and we were going to the closing table, and I was making the appointment for a closing. It was a couple days out, and the lender calls me, and they had brought the lender then, and the lender calls me and says, "Hey, we got a problem," and I'm like, that's never good. No. When you tell me 2 days before closing we had a problem. And he says, I had to re-pull the credit. And when I did, mom, so I'm representing dad and mom on this deal. I only say mom because she co-signed for her son's car. And he tells me, he's like, I can't get this approved anymore.
The son didn't make payments.
I'm like, What in the world? Yeah, it was something having to do with, and we never even got to that, a payment, but it was putting the debt on her.
Yeah, sure.
Made it to where they couldn't qualify. We were skirting. I mean, we were right down we were almost not even there with their picture to begin with, but we figured a way to do it. So yeah, he tells me I can't close the deal. So we're scrambling to figure out what to do, and we ended up having to back out of the deal, and they ghosted me. I've even had people say, well, hey, can I go pay cash for something? It's like, no, because that affects your reserves. That's going to impact how much money is in the bank. If the underwriter comes back and says, hey, I want a copy of what you have in your bank right now.
Well, we have to. We have to provide the most recent 2 months bank statements.
Oh, well, it's for
any account where the down payment funds, the cash to close, the closing costs, all that stuff is coming from. So that's a rolling 2 months. So if you're out there house hunting for extended period of time, you're going to be sending in those statements as they cut.
Yep.
As they cut. So we had the most recent 2 months.
What's the strangest thing you've seen somebody try to use as income?
Not so much income, because income is income. Either you get it or you don't.
Yep.
From an asset standpoint, we've had athletes put up jewelry. They NFL pro will make $3 million a season, and they have nothing to show for it, unfortunately, other than a lot of really nice jewelry. And they want to get that appraised and put that up as assets. We have people that come in and say, my dad's going to be on the loan. He has a mortgage on his house, but he does have 2 houses that they're investment properties that he owns outright. And that, unfortunately,
liquid assets
is not usable.
Yeah.
Because that house could, get flooded tomorrow.
Yep.
And so
I had no joke. I had somebody send me a picture of cash. They sent us a picture of cash. It was under their bed, and they took a picture of it.
Was it like?
And then I'm like, no,
it was just handcuff.
It was just under, like they had it was weird. It was a box springs mattress that had a cutout, and there was cash in there, like they were trying to hide it from somebody. And I text him back and I'm like, hey, I don't even know that for yours. I don't know that this is your money and the bank is not going to understand that this is your money. I kid you not, he took a selfie with it. He took a selfie with it and sent it and he said, here's your proof that it's my money.
You know the problem that is though? As a lender, I have to source or we call season.
Got to find out where it comes from.
For 2 months.
Yeah.
So that cash is there, put it in the bank. 2 months down the road, I can now use that money towards your down payment.
Well, I told him, I was like, man, we can't use that.
Yeah, I can't. The government wants to know where the money's coming from. In this crazy, crazy world we live in, you're constantly, on behalf of your client, negotiating for the best deal possible, whether that's purchase price or seller concessions, whatever it is. What's it like negotiating with different agents? And any funny stories you have about an agent willing or not willing to negotiate a certain aspect of a contract?
Yeah, so I have one actually we're working on right now. One of our buyers, the realtor calls me. I text her and we're talking. A lot of things happen via text. You know, you don't hop on people don't want to talk on the phone anymore as much. So we're texting back and forth, and I'm like, hey, my buyer's here, your seller's here. So she's coming back at me and saying, no, we're about $150,000 apart. And I said, listen. I said, you can have the house on the market for another 6 months and you're going to have the holding cost. It was a new build.
Yeah.
They had custom built. I said, you're going to have a holding cost. You're going to have the interest. I know that you're bleeding money, right? So I'm calling her bluff. Good. I'm calling her bluff and seeing what she says. And I'm texting. And then I use this as a strategy. I go dark. Oh, they hate it when you go dark. Silence. Yeah, silence. They're like, and then I leave them on red. So they know that I've read the text message, right? They know I've read it. They know I've seen it, but I'm not responding. And it is a negotiating tactic that I'm using to let them sit and stew. So I call my client, and my client's like, hey, is the deal done? I'm like, we're close. We're close. I've told them where I'm at. They have texted me back, and I've left it where it is. Let them sit in this for a second. And so 2 days go by, 48 hours. And she calls me, and this is the first time I've ever talked to her because she hasn't called me. She's like, hey, are you guys still interested in the house? And I said, oh, I'm so sorry. We've been looking at other houses and pursuing other options. I said, which address is this again? And she's like, oh, man, we don't even know what address it is. And so she tells me the address, and I know what address it is, and we're not looking at it. We have been looking at other houses. But this is just a little tactic I use. And so she sends me a text and she says, hey, here's the original thread. And I'm like, oh, you're that agent.
That one, yeah.
And I'm like, oh, well, hey, you know what? Here's where we are. And then I hit her lower than what I hit her before. So now we're even further apart. Well, what happens is she comes back and counters, and where she countered was right where we wanted to be. So I think that the conversations don't happen as much as it's all about the texting back and forth, and it can get pretty heated.
Yeah.
Honestly, man, people are, and it's so crazy. It's like, have you seen the videos of like the dogs that there's like a door, like a glass door between them, and they are like about to go at each other, and then the doors open, and all of a sudden they're like, hey, how you doing? They're cool with each other, right?
Right.
That's how it is. Like you have these conversations via text message and via email, and man, you're firing back and forth at each other, and then you actually get on the phone or you talk in person, which we never talk in person, but you get on the phone, and then it's very cordial. Conversation changes. But I can tell you that you have to hold a strong poker face especially in the market we're in right now. Where we are in DFW right now in the market, we're in a buyer's market. And so the buyer has a lot of the power. And so I'll tell you another situation.
Right now, though.
Right now. It'll shift. No, it'll shift.
Right.
So you need to get in, buyers, buy right now. The client that I was mentioning previously, we were on a deal before. And Todd, you got me the pre-approval, and we were ready to go. We were putting the offer in. And then all of a sudden, she reaches out to me, and she says, hey,
the listing agent does.
The listing agent. She calls me.
Yeah.
This is big.
Unheard of.
She's calling.
Yeah.
She calls me and she says, hey, we got another offer yesterday. I'm like, shut up. You've been on the market for 6 months and you happen to get another offer when I send my offer in. So I always do a verbal and I'll do an email offer before I do an official offer because I really want to test the waters to find out even if it's worth my client's time and my time. So I sent an email offer and said, hey, here's our terms. Here's where we're going to be. Let me know if your seller would accept. If they will accept, then we'll go ahead and type up a real offer. We'll send that over on paper. So she comes back to me. She says, "Yeah, we got an offer. Here's where we are." And she said, "For you, in order for you to stay number one, we need you to pay the closing costs." And I'm like, "Of course you do. Of course you do, right? Because you're not going to tell me the offer if you even have an offer, which I think it's totally unethical that they would lie. However, I've seen it happen where they do lie. So this is on Thursday. On Friday, she says, "Hey, we have 2 showings." Oh my gosh, the heavens have opened, and you're getting showings and you're getting offers on your $1.3 million house. Come on. And so I was very frustrated. But then so that happened Thursday. She said, Friday we have showings. Friday afternoon, she calls me at about 3:45. No, she sends me a text. Sorry, she sends me a text, and she says, "Hey, I just want to let you know we have another offer." Okay, 6 months, 180 days on the market. You haven't had 0 offers.
Right.
And all of a sudden, in a span of 4 days, you now have my verbal offer and 2 written offers. She said there were written offers. And so she's like, then she felt like she had the cards. And she's like, "Hey, if you want to do this deal, here's what we need now." I'm like, "Well, you changed twice. So I don't even know that I want to do the deal anymore."
Right.
So she said, "You need to be here and here." And I said, No. I said, "Here's where we are. You know that you've talked to the lender, or you've seen the pre-approval letter. You know this, you know that. You know that we're good for it. It's a quick close. It's in you. I'm putting it in your court. If you want to do the deal, here's our terms. Let me know." Send. Hit the button. She texted me back, and then she asked me a question. What did I do? I left her on red. I read it. Let her stew. Guess what happens? The next day, she calls back again, and she says, "Hey, we got a deal."
Yeah.
And I'm like, so that's where it is. So where you have to have the poker face, and it's very
Your heart rate is
oh man, anxiety is like up, and you're like, I don't know. And my job is to secure the home for my buyer.
Right.
Right. You're to get the loan. I'm to secure the property. And so I'm stressing. I'm over here stressing about, oh my gosh, am I gonna lose the deal? And this guy's coming from Houston, like he's seen a lot of properties, and I got to take care of him. So yeah, that's just a crazy story.
So Joey, you do a lot of negotiations as we discuss. Any off the wall weird stuff that people have tried to include in the sale of a home or as part of the deal?
Man, funny you should ask that. I have one of the craziest stories that I've ever heard, and it was I was putting together a contract for a house, dealing with, so there's always one, if I'm helping a husband and wife, there's always one that is like the communication, they want me to communicate with them more than the other.
Sure.
And so there's one that'll just sign the papers, they won't read it, right? But there's one that actually reads the contract. So I had a husband, we went to the house to do our walkthrough, to talk about the house and selling, and hey, how to get it ready. And he made a couple of mentions about how the dog had destroyed this wall, and how the dog had messed up the carpet, and how the dog did this, and he can't stand the dog. And it was a gift to one of his kids, and the kid had since left the house, and they left the dog with them.
Okay.
And so he says, "I do have a question, and I'm really glad that it's just you and I here. When we write this paperwork up, do we have to put things like that are included or excluded?" And I said, "Yes, sir." I said, "We'll exclude some stuff, and like your TVs and TV mounts, curtains and curtain rods, security system." He goes, "Okay, hold on. What about including? Like, do we just include it?" And I said, "Well, if it's attached to the home, it's going to stay." I had no idea where he was about to go with this. And he says, "Well, I want the stupid dog in the contract." And I said, hold on, time out. What did you just say? He said, "I want the dog to be sold with the house." And I said, "So you don't want the dog going with you?" He said, "No, I can't stand the dog." He said, "But here's the thing. My wife can't know about this." He said, "I want her not to know about it till the very end, when they send all the paperwork over, and then she finds out that the dog has to stay at the house with the sale when it's sold. I don't want her to know until it's already official and it has to happen." And I said, "Sir," I'm like, "Where's Ashton Kutcher? Am I being punked right now?"
That's right.
Like,
Yeah.
well, are you serious?
Camera.
And he's like, "No. Did you see all the damage that dog has done?" That is not my dog. I did not pick that dog. I don't like that dog. That dog tries to cuddle with me. I don't want to cuddle with the dog. So therefore, I want the dog to stay and be a housewarming present for the new buyers." And I was like, "What? I can't even believe this." So we didn't get that far. Ended up, he loves the dog, and he secretly loves it. It's one of those things where you're like, oh, I can't stand you, but oh, hey, come here.
No one's around.
Yeah, nobody's around. We're best friends.
Yeah, I get that.
But I did tell the wife, like later on after we closed and they had moved out of the house and the dog was at the new house, I told her, I said, John didn't really want to take the dog with you. And we're sitting around having coffee and she said, what? And we got to talking and she looked at John, man, if looks could kill, that dude would have been dead 10 times on the floor. Yeah, that was awesome.
Yeah, the dinner table would have been really awkward that night if the dog had been.
Could you imagine? Could you imagine the buyer walks into the house and there's a dog with like a bow on its neck, and it's just like has a piece of the wall in its mouth already destroying the house. Welcome home, yeah. Or it had a rug that said welcome home in its mouth.
Well, if it's a purebred, that could be part of the appraisal. And it could help me value it.
Yeah, good, I guess.
Right.
Hey, they're expensive dogs. It was a golden retriever. Really pretty dog, and it was an expensive dog. Yeah, I just like to get into everything.
What's a white lie or something that someone's told you one time that was completely outlandish or off the wall?
I got this buyer from a referral. We met with the family. I was helping them sell their house in Dallas and move to a different house. And she says, hey, I'm starting a new job. Well, I have a letter for the offer.
Okay.
And that way I can give it to you and you could submit it to the lender. And I was like, okay, I've never heard of that before, but yeah, that makes sense. I mean, if you're going to be changing jobs during the process, we can do that. So
not uncommon.
So she says, I'm a nurse. She made like 68 to 75,000, somewhere in that range. And she was going to be taking a job closer to 80,000. I'm like, well, that's awesome. You're going to be having more money. So I get the letter. I don't really pay much attention to it. It says, we're offering so-and-so this position at blah, blah, blah. And this is the amount of money she's going to be making. Her start date is X date. So I get the letter and I send it to the lender. Don't think about it. Lender sends it to underwriter. You don't think about it. He's trying to pre-underwrite it so we don't have any issues. And so questions start to come out. I ask her, well, you're a nurse. Where are you a nurse at? And so she sends me the document. I, again, didn't pay much attention to it. The lender calls me and says, hey, did you see where the pay stub is from? And I'm like, no. And he goes, it's from a vet clinic. And I'm like, what? And so she was the person that sits at the front desk at a vet clinic and checks people in. She was not making what she said she was making.
Not a nurse.
She was not a nurse, and she did not get offered a job. So
that's called fraud.
That's called fraud.
Yeah.
Not just lying.
Don't do that.
No. We caught it right at the beginning to where it hadn't went into that far yet, but you can guarantee. We talked about ghosting earlier. Mm-hmm. There ain't nobody that has ghosted me quicker than when I called and I said, hey, I want to talk to you about your pay stub that shows the vet clinic. And she had realized, holy cow, I screwed up. And then she never talked to me again.
All right. Why is it important to be represented by a real estate professional?
So are we talking new builds or
both?
Okay.
Either.
All right. So let's talk new builds. That is a tricky one because you walk into a builder's office and it's like buying a car. They set you down. Hey, we'll take you through everything. You don't need nobody. We'll stay here and do it. In fact, some builders will tell them, hey, if you don't have a representation, if you don't use a realtor, we'll actually give you a little bit better of a deal. That's not true. Like the builder is paying for you to have somebody representing you to hold your hand the whole way. You want to make sure communication's on point, and that's what the realtor is going to help with. You want to make sure the inspections are done. You want to make sure that when you're doing the build process, there's different points of the process that can be, from a buyer to builder perspective, going back and forth could be uncomfortable.
Sure.
But if you have a realtor, say, call a realtor, and the realtor is what they do is an advocate on your behalf. And they walk in and they say, hey, Mr. and Mrs. Builder, you said you were going to put a shower here, but you put a bath here. So we need to have that changed.
Right.
And the builder goes, no. We've already poured the foundation. We've already did this. No, we're not. And so a lot of times when a builder is not represented, a lot of times when the buyer is not represented, they don't they just go along with whatever the builder's saying because they feel like they cannot question them. They feel like they cannot go back and make changes. But if there's a signed contract stating that you wanted this and you wanted this and you want that, then you should get that, and that, right? So you should get those things. And it's hard for a buyer to walk in there and try to demand those things. And I think that there's a different level of respect when a realtor comes in, and a realtor can talk one-on-one with a builder. And I'd even have the conversation with my client where I tell my client, hey, look, go to your car. Let me talk like this. Let me talk this out, because I'm going to get further, I believe, by myself than I would with you in here with me. And it's just because I think that you pull down every wall. Like every wall comes down. And hey, maybe they see you as a realtor walking in as potential other deals, and so they're going to be a little more, take it a little more easy on you. Where if your client's in there, they may feel like they need to bow up and be strong or tough or whatever.
Well, it takes a lot of their promotion out of it too, because you're not buying the home.
Yep,
and that guy isn't technically living in the home, selling.
So it's all about numbers. It's all about, hey, let's make this deal work, and how can we make this deal work for both of our clients? All right, well, for our client together. So on pre-owned homes, man, it is crucial. And so, Todd, a lot of the rules have changed where realtors are being paid commission, and do we pay a commission? Do we not pay a commission? So I think that that's even coming into place now, where we're seeing somebody on my team. He had a buyer up in Plano, and the buyer wanted to buy a home, but the seller was not paying any commissions. And so they decided to pay zero commissions. They weren't getting the traction, but the buyer loved the house. The buyer called the team member and said, hey, listen, I don't want to pay her commissions. I don't have the money to pay her commissions, so we're going to do this ourselves.
Yep.
That's a no-no. That's a hard, and you got to understand, as a buyer, you'd have to negotiate every contract. You're going to have to get your hands on the contract to fill them out. You have no help. You have no one guiding you through the process. So that's a big no-no. And what ended up happening is the deal fell through. He called back, and they decided to go after a different house that actually was paying commission, because he understood that, hey, I cannot do this thing myself. It's like calling somebody. If I called somebody to do masonry work at my house, I had a wall that came down and it needed to be re-bricked. And I told my wife, no, honey, I got it. I'll brick the house. We'll save some money and I'll brick the house. It's okay. My wife's going to want to move out. She's not going to want to live in that house anymore. Hey, because I am not a professional masonry person. I have no idea what, I can get a brick and put it up there, but I don't know what I should be doing. And so that's understanding that you're not the professional at negotiating a contract. So to understand that you do need representation when you're going in to buy a house. And there are different ways now to where we can, if a seller is saying I'm not paying a commission, there are different things that we can do to move money around to where your representation can still get paid a commission. Just has to be orchestrated a little different. But it is crucial to have a realtor, whether you're buying new build or buying pre-owned. Absolutely take the time, interview, find the best fit for you, and make it happen.
Yeah, I'd say one thing just from my days of being an agent myself, FSBOs, for sale by owners, and now sellers that aren't willing to pay a commission, they typically have a reason why they are foregoing a professional service, either as a listing agent hiring someone to sell their home, or willing to pay a buyer's agent. It's because they have to have the money for the sell of their home. They have to have that 3% or whatever the commission amount is, because they can't afford to give it to an agent. And because of that, they're much less likely to negotiate anything than what they're offering on the house.
100%.
It's a very tough negotiation to have, even for agents working with people that don't have listing professionals.
I agree. I do have a question.
Yeah.
As a mortgage consultant or a lender, how do you know how much a person can afford? Are you psychic, Todd? Are you psychic? When you get a call, do you think, oh, hold on, here it is, you can afford $400,000. How does that work?
So there are some basic math. A conventional loan borrower, take 47% of your gross monthly income, and that's going to be your house. That's going to be your all-in debt max. So add up your car payment, your credit cards, all that type of stuff. You have that number. Calculate a house amount. You can Google mortgage calculators, say put in 400,000, put in a rate of 6.5%. Here's your payment. Add in another 750 for taxes and insurance, and then add your debt to that. And if that number is under 47% of your gross monthly income, that's a good indication you're going to get approved for a conventional loan. Now, to get down to the actual details of it, what we do is once we have a credit score and we have assets and we have the income from a borrower, like everything else in this world, we have an automated approval system. It's an AUS, automated underwriter system. And we put that stuff in that data, those numbers into our software, and we hit go, and it comes back with an approval or denial. And if it's a denial, it tells us exactly why. You need more reserve, need more down payment, whatever it may be. And then we can tweak based on the client's preference for a monthly payment. Hey, if we drop the price to here, what does your monthly payment look like? If we drop it more, what's the monthly payment look like? Again, I can approve you up here. Doesn't mean that you feel comfortable paying for that house. You want a house down here.
Yeah.
More than acceptable.
Okay.
Do you ever have a client that seems over the top gung-ho about buying a house, whether it's their first time or not, and then all of a sudden it feels like they fell off a cliff and they can't be reached?
My people see what I do on social media. They see, oh, he closed a house over here. He showed a house over here. He sold this house. But they don't see when I wake up in the morning, and I'm like, hey, I got to call these clients, or I got to text these clients. I got to reach out to these clients. And then it's like crickets. And so it's very, very frustrating, but it's part of the business. I mean, when you're in sales, any part of sales, you have your follow-up calls, you have your calls that you had to make, and you are going to get ghosted. And I would say that if I took all of my database or my clients and tried to figure out, I'd say I probably get 15 to 20% ghosted a month. So I feel rejected a lot.
Yeah, I think.
What about you, man?
I think you need therapy.
I do probably. I think all of us in sales need therapy.
I think we do, because we're crazy enough to be in this industry.
Yeah.
Or sales in general.
So talk about yours.
Yeah, very similar. I think kind of going back to a previous conversation we had about credit scores, I think people, unfortunately, they think their credit score is higher than it is. And when we have to have those conversations, which aren't pleasant all the time, they're not bad. It's not a no, it's just a not right now type of answer, right? And I think that people get embarrassed with their financial situation, and they kind of just turtle up, if you will, and they go into a hole and they, stick their head in the sand, unfortunately, and they don't want to confront realities to some extent. Sometimes it's something else, right? God forbid it's a health issue, whatever. But we do see a good portion of those clients come back after a while. Something I always do is like you said, you text them 3 times. I follow the same mantra. If I don't get a response, I'll just text them and say, hey, I haven't heard from you. Are you okay? Because
hopefully they see that and they respond.
Like, yeah, sorry, I've been busy. I've been traveling for work. And it's typically something not terrible, which is good. But it lets them know that we're still here for them when they're ready. And it's not a no, it's just a not right now. And whether that's from us or from them, it's okay. We're still here to help. Anything that you would recommend in the inspection process that buyers, first time or not, pay particular attention to?
If you want to know about all the expenses and costs that maybe are hidden, you can click below, the video below, and where I break those things down. But going into the inspection specifically, I think a lot of times buyers just forget to look at it. There's so much excitement and so much going on, but you also have the other buyer that is so hypercritical of the inspection.
Yes.
So you have to find the middle and understand that you're not buying a brand new home, that there are going to be things that are wrong, but understanding that that's where I, as a real estate agent, can come in and say, hey, we can negotiate these repairs or money in lieu of repairs to where we can make the repairs with some of the closing costs.
Right.
And how we do that is we tell the seller, hey, Mr. and Mrs. Seller, we want you to pay $5,000 in concessions or closing costs for our buyer to be able to save that money on what they're closing with. So they pay $5,000 less in closing. Well, then they take that $5,000 less that they saved, and then they fix up the home or fix this or fix that. So, yeah, I think that really It's just about taking the time. They forget to just, because you're going so fast, and the option period is 5 to 7 days, so it's not a long time.
Yep.
If you get the inspection on day 3, you only have a few days to review it and to get it in. I think that they also forget that they can even have different professionals come in to look at the house.
Yep.
So they can have a plumber, electrician, foundation company, HVAC company come in, and really, if there are issues, they can dive into those issues. So understand that when you're getting an inspection on your house, you have the ability to have these professionals come in and look over your home to make sure. Now, sometimes there is a cost associated with that.
Right, of course.
Sometimes they will do it free. I've got an electrician, he will look over the whole house and make sure everything's done, but it's like $300.
Yeah.
But $300 for peace of mind, knowing that everything is
You're not buying a lemon.
Yeah, you're not buying a lemon.
Exactly. Something else to remember, just when I was an agent going back, is inspectors are required to inspect a home as if it was built yesterday to current code. So a lot of inspections, especially if it's even a house that's 10, 12, 15 years old, the inspection report's going to come back with a lot of what some buyers would consider red flags. Doesn't mean the house was built improperly. It just means that to today's standards, something has changed. A great example of a simple one is a GFI outlet in a laundry room. Laundry room has water present. 20 years ago, that was not required. So you buy a house from the early 2000s, if there's outlets in the laundry room and they're not GFI protected, the house was built according to code. It's just not code now. So the inspector has to make note of that.
Mm-hmm.
Doesn't mean something's wrong with the property.
Yeah, that's good. That's good. Really good.
What are some of the techniques that you've used or use to get your clients' offers accepted if there's multiple offers, let's say?
All right. So one of the things that I have done, which is frowned upon in today's world, that I've done in the past, and if my broker's watching, I haven't done it lately, is I have my client, the buyer, write a letter to the seller. And I think that that's old school. The point of that is to make, so when a seller receives an offer from a buyer, it's numbers on paper with a foreign name. That's it. That's all it is. They don't know anything about this person that's buying the house. But I think I'm also a listing agent. So my clients, they want to know if they're selling their house. They really want to know who's buying the home. They want to know. Hey, are these people going to take care of it? What type of what stage of life are they in? Do they have younger children? Do they have old children? Are they empty nesters? And so I think that writing a letter is really good because you can give them a snapshot of the family's life. Like, hey, how do they live? Who they are? And so I think that's one of the things. When the market was going absolutely bonkers and crazy,
Yep.
I was on Channel 8, man. I was on Channel 8 in a news report because after 100 viewings of houses and after 27 or 30 offers written that we had lost out on, we finally secured a house for my clients in Colleyville.
Nice.
And the market was so crazy then. I'll never forget it. Pulled up to this open house. They were not showing the house. You couldn't have requested an appointment. They had 2 days where it was open house. And on those 2 days where it was open house, there was at least 100 people standing waiting outside. You got 5 minutes inside the house with your realtor, and then you had 5 minutes to walk the house and get out. And then the next person, and then they get out.
Wow.
So calling the agent, this is something I did not do. I heard somebody else do, but calling the agent said that somebody had sent their client a gigantic fruit basket with gift cards.
Okay.
So bribery a little bit.
Yeah.
But hey, nothing says pick me like a nice warm or a nice cold fruit basket and gift cards sticking out of it. So I was like, wow, that's above and beyond. I mean, I've never thought about that. But going forward, I was like, hey, I've got to figure something out. So what I ended up doing is the second thing I did. So write a letter is one, and then I have my clients write a letter. And the second thing, which is you think, hey, that's kind of an obvious thing, but back then nobody was doing it, is I went to my client's house and I recorded a selfie video with me and my clients. And we talked a little bit about 1 minute video. We talked a little bit about the house and a little bit about why they loved it. And we sent that to the realtor.
That's good.
Now, I wanted the realtor to understand that you can do with that whatever you want. You want to send that to your client, you go ahead and send it to your client. But I want you to understand who we are and they are. And then also, because of the market where it was, the lender sent a video to the realtor as well. So we had 2 videos going to the realtor and a letter. We ended up going into contract. My clients have lived in the house for over 2-3 years now. They love it. But we are forever. Their story is on Channel 8. I kid you not.
That's great.
But about how hard the process was. But we were finally able to get them approved for a house after putting offers and offers and offers in.
Well, that's because this process in general can be very emotional.
100%.
And people will accept an offer or deny an offer for the craziest reasons.
They will.
Any stories? Anything that you submitted an offer and a seller was like, I'm not taking their offer because, and you looked at that reason and were like, are you serious? The math is there. The numbers work.
Yeah.
How would you take our offer?
So I did have a crazy story. Weird. Very, very weird. I sent an offer in for this house. There was no offers on the house. It was sitting. The market was similar. It was about a year ago. And the realtor sent me back a text message and said, hey, received your offer. My client's declining it. I was like, what? Why are they declining it?
No reason.
We don't want to counter. Just
outright. No.
I'm like, so you want to counter us or what? What's happening here? And he's like, no. He said, I think they just want to decline it. So I called him. I'm like, listen, man, the offer is $5,000 less than what it's listed for. This is a good offer. What's the deal? Like, what's happening? He said, can I be transparent with you? I didn't want to put it in writing, but I'll tell you on the phone. And I said, well, of course, you can be transparent.
Here it comes.
He says that they were in the kitchen and the wife of the seller, the seller, she heard the wife of the buyer. So she heard on camera the buyer say that she did not like the way she designed the kitchen and decorated the living room. I'm not kidding you. I was like, I started busting out laughing. Like, are you serious right now? Like, did you educate her on how that does not matter? Did they love the house or they wouldn't have came and seen it?
Right.
If they don't like the way the kitchen's decorated or the living room's decorated, it's not a big deal. And he says, my client got so frustrated that she cried on the phone with me saying that she was so upset and hurt.
Wow.
And I was like, you got to be out of your mind. And that house set on the market. We ended up finding another house. It ended up going under contract for about $20,000 less than what we offered. So they lost money because they were upset with something we said.
It can be tough to remove emotion from the process.
Yeah, and I think they'd owned the house for a long time.
Yeah.
I get it, man.
Sure.
I understand it, but at the same time, it's like you got an offer, you want to sell it, it's for sale. Take the offer, let's move on. But anyway, yeah, that was pretty.
You want to hear a funny story that I have?
Yeah.
Sports story. Okay. So as you know, I'm from Kentucky, born and raised in Louisville, went to the University of Louisville, big Cardinal fan. Our rivals are Kentucky. Any UK fans out there, I would more than happy to do your loan, but not a fan, as Joey, as you know. I was an agent at the time, so we were selling our own home, moving from McKinney down to Plano. And my office has a bunch of Louisville sports memorabilia in it. And we left the property for a showing, and the showing happened, and the agent called me and said, hey, I want to let you know we're putting an offer on your house. But there was one hurdle. And I said, well, what's the hurdle? And she goes, well, the husband walked in, saw your Louisville memorabilia, and he's a diehard Kentucky fan. And the wife had to scold him, essentially saying, I love this house. I don't care who the guy roots for. We're buying this house. And I was like, okay. I've never thought that my fandom would lose me a possible sale, but it almost did, I guess.
That's
But
crazy.
in the end, we prevailed. So
That's crazy, man.
yeah. You ever been to a listing appointment and the seller is adamant that they have something in their home? There's a surefire feature that is going to sell their home for top dollar.
Yeah, I do. I do, man. I do. So I went to this house and we walked the home, and they have a lot of pride in their house, right? Of
course.
And they live there, they spent money there, they've invested in the house, and the wife she's been messaging me on Facebook, hey, I can't wait till you come to the house. Tell us what you think of the house. We have a surprise. We know you're going to love it. And I'm like, man, what's going on? I'm excited to go in and see this house. And she, we walked through the front door. Well, coming up to the side, I noticed that on the side, there's an electrical panel that I know is for solar panels or generator.
Okay.
And so I was like, oh, that's unique. That's a really good selling feature, if you have the solar panels or a generator. So as long as you don't owe money on it.
Right. Potentially a good selling feature.
Potentially. So I was like, okay, coming in the house, really, really excited. I walked through the house and out the side of the house has kind of a view of the park. And I'm like, oh, that's a good selling feature. And I'm trying to, in my mind, already try to see, what is she talking about? Like, what was I really excited to see? And so we're walking through each room, and we get to the master bathroom, and she's like, okay, before you come in here is the best thing that's going to sell this house, and I want it to be the first thing that you put a picture of, and I want it to be on the listing. So I'm like, okay, first
a house on the listing, like a picture of the bathroom.
Well, yeah. I'm thinking, okay, it's got to be a beautiful closet.
101.
Yeah, I know. I'm like, maybe it's the closet. Because I walked in the bathroom, not very real special. Okay. So I'm like, it's got to be the master closet, right? So I open up the master closet. No, it's not the master closet. Not unless there was diamonds in there they were giving away. So I shut the door, and then I turn around, and she is so giddy, and she's clapping her hands. She said, look. And I was like, what? I look down, there's a toilet. She opens up the toilet, and they had put a new toilet in there that had a bidet in it. This lady was freaking out about a bidet. Like, she is like, and I am like Texan to the core. I don't even know what a bidet is at the time. I'm like, she says, it's a bidet. And she says, it cleans your badootie. I kid you not. She says that in this listing appointment. And I'm like, what did you just say? And I said, so you think that, so I tried not to be insulting. So back up. I didn't go, do you think? I was like, okay, that's awesome. That's really cool. I'm like looking at it going, and I'm like, I don't know what a bidet is, but that's awesome. It looks just like a toilet. Have you seen a toilet with a bidet, like not the connection,
like integrated,
but integrated in it? Yeah. You can't even really see anything.
Right.
It just looks like a normal toilet. And so I still don't know what a bidet is as I'm leaving the appointment. And I don't want to act stupid and be like, here I am trying to sell the house. She thinks the best feature is the $1,000 bidet that they put in. And I'm like, did find out they do have a outdoor generator, awesome generator that they paid off. So I think that's the biggest selling feature. But she is freaking out about the bidet. The husband pulls me aside and says, hey, she really loves that bidet. Like, he says she loves that so much, and she's serious when she says she wants it at the forefront of the listing, because apparently she had never had one and then got one and was like, fell in love with it. So she thinks the buyer is going to fall in love with it. The problem is I'm thinking they may look at the listing and go, I don't even know what a bidet is. So I get to my car.
Yeah.
I get to my car. Here's the shame. I get to my car and I
Googled it.
Actually, I Siri'd it. I said, hey, Siri. It'll go off now. What is a bidet? And it comes up and it tells me, and I'm like, I just sit in my car and I thought to myself, there's no way that I'm putting a picture of that as the first photo. Yeah. Nor am I listing that as like the first thing when I list this. Check out this bidet. Like, look, asterisk,
the house is
bidet.
Mediocre at best, but the bidet
is to die for.
10 out of 10.
Yeah, you will never want to leave the
right.
She's like, she did say that. She's like, this room and this bathroom is amazing. I'm my own little resort.
Now, could she take the toilet with her and just swap it with it?
You could take anything with you, right? Because you put something like kind in there. But her husband was trying to tell her, sweetheart, we're going to buy you a day. She's like, no. I think she genuinely felt, and if you're watching this, I'm so sorry. I think it was a great feature, and hey, we sold the house, but she genuinely felt like this was like the thing. Like, there's nothing like it on the market. And I think it had to be a little education on my part, and I did, where I was like, hey, these can be added. I found out these can be added. So I went and did my research, and so we ended up, it was in the description, but it was not at the beginning. It didn't say It didn't
went
say,
home?
come sit on our bidet, yeah, or something like that. It just said, hey, at the end of it, it was like, oh yeah, house comes with a bidet. The bathroom with a bidet.
with house included.
Yeah, there you go. That's and if it could have been the way she wanted it, that's how it would have said.
All right, so obviously she loved the bidet. It was amazing. And when you're writing descriptions for homes, for listings, are you legally obligated, bound by law, to say something is amazing, even if the seller thinks it's amazing, but maybe you think I've seen better?
So I typically try to just state fact. Now, this kitchen is a chef's dream because it is. It's huge and it's like that, and then I'll put, I'll talk about how beautiful, I may talk about how beautiful a wall is or an accent wall is or how customized a bathroom is, but I try to stick away from the words amazing or perfect because that's
perfect.
Exactly. So now I can tell you though, on the flip side, where I'm walking into just show a buyer a house, I am brutally honest. In fact, one of my buyers the other day, we were in a house doing an inspection, and I told the inspector, I said, hey, tear this place apart. I want you to find every single thing wrong with it because I want my buyer to be educated. I need them to be educated. The kitchen may be great, right? But there may be cracks and indicative of there being severe structural issues. So when I walk into a house, I try to make it a point to find everything wrong, to point it out to them, to where they have to convince themselves to fall in love with it. I want them to push, but as a real estate professional, it's so easy for somebody to go in and chase a paycheck and go, hey, this place is beautiful. It's amazing. It's wonderful. And then I've had an inspector tell me that he had a buyer come to him, or buyer's agent, a realtor, and say, hey, I need you to lay off the inspection. I need you to calm down so that we can push this deal through. That's that is unethical, 100%. And so, I try to stay clear on the listing side, but also when I'm showing a house, I do stay clear of saying those things because I want to find everything wrong with the home.
It's typically the cosmetic things aren't the ones that are going to cost a client the money after they close. It's the things they can't see. They're the real big ticket, big dollar items that they can come back and bite them. So it's important to make sure that those aspects of the house are well known before they continue with the contract.
100%. So, hey, let's talk about the market in DFW. Where do you see the market going in the next 3 years?
As you know, everyone's moving to Texas. It seems that way anyway, right? We got the Golden Triangle, the Dallas, San Antonio, Houston area, and it's growing exponentially.
Yep.
And we're fortunate enough to see that here in Dallas. If you love traffic, it's a great aspect of Dallas. But so your inner cities, your cities like Plano, Allen, Addison, McKinney, Frisco, large section of those are, as you know, already built out. So that there's the houses that are existing are the only ones that are going to be selling. There's no new builds going on in Plano. I think Plano is something like 99% developed.
Wow.
So there's no place for new homes to be built.
That's great.
Unlike the outskirts, right here in Forney or Prosper or Salina or whatever. So when you get down into the Metroplex, the houses are typically older, but tend to appreciate slightly faster than houses more out in the outskirts. The urban sprawl will eventually get there, and those houses will appreciate. But from a numbers aspect, when you're down closer to, and this is a good thing to remember, any town USA, any town in the country, the closer you are downtown, the more valuable the property. So here in Dallas, we have Highland Park, University Park. You're buying older homes, tearing them down and building these McMansions, as people call them, right? You're paying a lot per square foot. The only caveat to that is if you're in a beach community, the beach is like a separate downtown. So the closer you are to the water, the more expensive the property. So here, as you go out from the Dallas downtown, you're gonna have typically lower and lower prices. Now, there are some caveats to that. Here you have your legacy area in Plano on the Tollway that is like a separate little downtown. You kind of have one over at George Bush and 75 that they have a lot of commercial development, which elevates properties around that area, your TI area type of thing. But appreciation is still going to continue in Dallas, and it's going to be a seller's market come the warmer months for sure.
Well, I like hearing that. I think that in my market, the market that I primarily go east, northeast, whether it be Rockwall, Royce City, Wiley, Saxe, Murphy, going all the way over to Forney, Kaufman, Terrell, Crandall, all that we're seeing, unlike Plano, it's not built out.
Right.
A lot of those areas. Now, Rockwall, a lot of Rockwall is built out. Heath, a lot of Heath is built out, but we're seeing new communities come up in some areas. But really going into Kaufman County, there are so many developments that are still on the path of coming soon and are still happening. And so we're noticing in our markets that the prices have dropped. We even at the end of quarter four of 2024, we saw a drastic number of builders just plow through their prices. I mean, drop incentives, and drop pricing because they had to move the inventory
Before the end of the year?
Yeah, before the end of the year. Yeah, and so we're seeing the kind of the opposite. We're seeing, and that's why I think the supply is so heavy in those parts of the area. Even Mesquite and Garland is pretty much built out, but going east into Mesquite has a couple of gigantic communities coming, and it's just causing all of the surrounding pre-owned home sales to dive and to subside, especially for those people back in 21, 22 that paid an exorbitant amount of money for their home.
Right.
They're now having to stay put.
Yep.
Now, they do have a lower rate, some of them, but they paid a lot of money for their house, so they're having to stay put until the market kind of rebounds and it's recast where there's not so many new builds that they're competing with. In Kaufman County right now, our average days on market is anywhere from 80 days to even 96 to 100 days. I mean, it's absolutely crazy. I looked at the market, days on market for Plano. It's drastically different.
Yeah.
It's less time. And all of Tarrant and Collin County seem to be less time than Dallas and Kaufman and Rockwall County. Yeah, so that's crazy. The different, it's crazy. A 30-minute drive yields such a different result.
Yeah.
On the market and where the market's going and what's going to be happening. I do look for in the next year to see a rebound in sales, to where values will start to creep up again, or at least plateau and not move. I mean, they've been dipping. We need them to either stay the same or go up. But I do look to over the next year to 3 years where the market will become more of even a balanced market or a seller's market. And I think here, unlike Plano in those areas, here we just need it to become a balance. Before we go to seller's market, we need the balance. We need the equal sales, we need, if somebody needs to buy a house, we got one house where,
one-to-one ratio.
One-to-one ratio where we can get back to where people are not losing so much money in their equity.
Yeah.
When do you see, or do you see a rate reduction over a 1% where we can make it more affordable?
The rate, while it is a factor, should not be the largest determining factor in a decision. Let's take an average price run here of $350,000, $400,000.
$450.
You drop the rate by 1/8 of a point, it may save you $30, $40 a month in a mortgage payment. The flip side of that, though, is that the 2025 anticipated appreciation nationwide is between 4 and 4.5%. In the Metroplex, we're probably going to be in the middle somewhere, 4.2, 4.3%. Let's just say it's 4%. Let's be conservative. $400,000 house, 4% appreciation, that's $16,000 in equity this time next year. Would you pay an extra $50 a month, so $600 a year, to gain $18,000 in equity next year?
Yeah, 100%.
Right. That is what we're seeing. It's really takes me back to college, Econ 101, it's supply and demand. There's a lot of new households being formed, people getting married, having kids. There's not enough homes supply on the market to fulfill the demand. When that happens, prices go up. And so clients that are out there waiting and for the rates to come down are really costing themselves a lot of money in equity with a short-term type of thinking. We have a great tool. It's called a cost of waiting tool. We can take a property.
Really?
We can throw it in there. Based on the zip code, it will calculate the next 3, 5, and 10-year appreciation.
Wow.
It averages out, hey, if you were to sell that house in 7 years, here would be the cost of selling. So it takes in not only the buying costs, the selling costs down the road, and then you plug in what you pay in rent if you are renting, and it will calculate how much money you are leaving on the table over the next 3, 6, 12 months by waiting and continuing to pay rent versus acting on and buying a property in that ballpark of value.
That's awesome. That's really good. I'm glad you told me about that.
It's just math. At the end of the day,
it is.
We work in a very emotional industry. There's a lot of money at the table on the line. And when you break it down, it's really just math. The numbers don't lie. The numbers are the numbers.
What does the conversation look like that you're having?
We have an initial conversation. I try to understand where they are in their lives. Why are they moving? Why do they want to buy a house? Are they downsizing? Are they upsizing? Once we kind of understand the why, then the first step is always an application. But once that's done and I have a better understanding of their financial picture, then we do what I call a mortgage consultation. We talk about the rate range, the time, the down payment, cash to close, all the numbers behind the transaction.
Mm-hmm.
As far as a first-time home buyer is concerned, that's when we really unpack a lot of the misnomers that are out in the market. If you still watch the news, I know a lot of people don't, but if you watch the news, they'll talk about the housing industry and how sometimes it's even better to rent. It's really sad in some instances where they're telling young people that it's better to pay someone else's mortgage than to pay their own mortgage.
Yeah.
And it's really a disservice. But one of the misnomers is how much down payment do I need to be able to buy a home? People think 20%. They hear 20% because, you're not paying PMI, which is private mortgage insurance.
Yeah.
In reality, a first-time home buyer on a conventional loan, 3% down payment. Minimum. That's what you got to have. 3%.
Did you hear that?
3%.
3%.
FHA, maybe you don't have 700 credit score. That's fine. 3.5%. That's all you need. If you're not a first-time home buyer and but you have good credit, you're on a conventional type of loan, 5%. Very rarely we have a gentleman who wants to put down 20%. That's great. That's 5% of my clients put down 20%.
Really?
And typically, those are the people that are previous home buyers. They've gained the equity over time in their home, and they have the money when they sell that home to throw down the new home. First-time home buyers, I can't think of one that has had 20%.
Yeah, which they don't have to.
They don't have to.
So misnomer.
It's like a big misnomer.
So what about if they have less than stellar credit?
I can do loans down to a 500 credit score. 500. 500. FHA buyer, 10% down, 500 credit score.
Okay, hold on. Now time out.
I know.
So I know that there's a lot of debt consolidation companies that really screw people's credit up.
There are.
And they really wreck and they wreak havoc on your credit. They make it worse. And they say, hey, it's got to get worse before it gets better. But it just stays bad for a really long time.
Right.
So tell us, how would you tackle that obstacle?
So my business partner, Sean, and I, we do work with a company that helps people repair their credit. Like you said, there are a lot of scams out there where their goal is to have you stop paying all your bills, essentially, wreck your score, and then go to those lenders and say, hey, will you settle for pennies on the dollar? The problem is that takes a long time to fall off your credit report and your credit and your score to be to recover from those type of actions. So the credit score is very time sensitive in that things that happened most recently impact it more than if they happened in the distant past. So when you stop paying your bills, that's going to destroy your credit, and you're going to have to start paying bills on time for a longer time to get your credit back up. What I always recommend, and what the companies we use is maintain minimum payments, but find a way, work with them to reduce the balance that's required to close that, pay that off in full. And that does a lot less damage to your credit and even helps you maintain a longer history of on-time payments.
Okay.
So we recommend that. And we have those conversations in the mortgage consultation, because at that point we have an idea of what their credit picture looks like.
Okay, so one of the questions that I get asked as a realtor a lot is, what does the pre-approval process look like for a loan? Now, I cannot tell them exactly. I ask some questions at the beginning to understand, hey, is this even a viable client to pass off to a lender right now? Are they ready? And then I pass them off to you. But can you touch on and tell us more about what does the pre-approval process entail and maybe how long it takes to be completed?
Sure. So in that initial conversation that we talked about earlier, I'm asking those big three questions. What's your income? What kind of assets you have? Liquid assets, retirement account, stuff like that can be accessed if required. And then what do you think your credit score is? So those questions and the subsequent responses and additional questions from the borrower kind of paint a decent picture, if you will, of whether they can be approved or not. There are obviously red flags. Like, you've been doing this long enough, red flags on the real estate side. I get them on the lending side.
Yeah.
From that, I can determine, okay, should I pull their credit? Should we discuss their credit in our consultation, typically the following day? Or am I going to have to request some additional information from them regarding the credit, the income, not the credit so much, but the income of the assets? You can kind of tell when someone's not giving you the full truth. What is it I don't know? Mm-hmm. What are you not telling me?
Yeah.
But to answer your question more succinctly, I guess, 24 hours. 24 hours, we have an initial call. Everything sounds good. I pull credit. We have our consultation. We go over the credit report. We talk about the rate range, the down payment, the cash to close. All that stuff jives with the income, assets, and credit that we talked about the day before. Then we're good to go.
24 hours.
24 hours.
That's pretty cool. All right, so you're talking about the pre-approval. Mm-hmm. Then what is the timeline typically for the loan approved to go from pre-approval to actually, hey, approved, signed, sealed, delivered, you're a homeowner? How long does that process take?
Well, that has to do with you as the agent.
Me?
You. I know. Now you feel special.
I know. I do.
So the pre-approval process is essentially the roadmap for the house hunt. There's no point in a borrower or a buyer looking for a home in a price range that maybe they would like a bigger home or a nicer home or more expensive, however you want to phrase it, or looking at homes they can't afford or they don't feel comfortable making the mortgage payment. A lot of times, and just so people out there understand, the guidelines that lenders lend by more often than not will allow a buyer to be approved for a higher priced home than that buyer feels comfortable making the payment for or on. They don't want to be house poor. I never recommend someone buying a home they don't feel comfortable making the payment on a monthly basis. Okay? So a lot of times I'm approving up here and they end up buying down here somewhere because that's the payment they want. All right? So once we have the consultation and we're through the process, getting in the process, that gives you a roadmap with the client to go out, look at homes in a given price point. As you know, and you can talk about this, the first thing you guys do once you're under contract is go through the option period, and that's typically what?
5 to 7 days.
5 to 7 days. Okay. Once you're under contract, that 5 to 7 day period has concluded. You've done the inspection. The house isn't going to fall down. They're not buying a lemon, right? Then the next step in our side of things is we order the appraisal. The appraisal is a third-party company comes in. They say, this is the value of the property. It doesn't matter what's listed at. That's an arbitrary number that the seller hopes to get.
Yeah.
The appraisal is what the market value is based off of comparative sales in the area, and it's what I have to go off of to lend. I can only lend on conventional loan, first-time home buyer, 3% down. I'm lending on 97% of the appraised value. The clients bring another 3%. Mm-hmm. We get that back typically a week to 10 days later. And after that, it's another 2 weeks to closing. So the whole time period is 3.5 to 4 weeks. from the time you go under contract, you found the house you want to buy, you're under contract, you're moving in that house 3.5, 4 weeks later.
Okay, so I'm sure everybody wants to know, because I am so curious.
I'm sure you are.
What is your shortest closing?
9 days.
9 days.
Now that's 9 days,
Look at that.
no option period. They come in, they're putting 20% down, so there's 0 red flags. Good income, lots of assets, lots of reserves. All their paperwork is in our hands. We have their W-2s, we have their pay stubs, we have their bank statements.
So you're ready to go.
Everything. They are on it like green on a pickle.
Yep.
All right?
Yep.
They are on it. There's no, we'll get to you tomorrow. No. It's, you get it to me now. I need it now. 9 days.
Okay. What's the longest it has taken?
Oh, longest? That's a tricky one because, as you know, we have clients that will go in and out of contract on multiple houses.
So let's talk about one, though.
One house.
Yeah, one house.
I want to say probably one I had last year. It was a weird house. 6 weeks, 7 weeks.
Holy cow.
And that's because the appraisal came in low.
So 45.
Or the inspection came back. The seller didn't want to do some of the required repairs, or they didn't want to do them with a licensed contractor. They want to do them themselves.
Red flag.
So negotiations took extra long, and there was a lot of extensions. But not so much on the lending side, just more of the process itself took extra time.
Got it.
You'd mentioned Credit Karma earlier. Okay. So quick public PSA on that. Credit Karma is based off of your revolving credit accounts. And the algorithm used to calculate that score is weighted towards credit cards, stuff like that. You pay off every month, hopefully. All right. In the mortgage world, we deal in installment loans, right? Your mortgage is a monthly installment loan, much more like similar to a car loan. So a car loan, paying your car loan on time, paying your rent on time, paying your current mortgage on time is going to boost your mortgage credit score more so than paying your credit cards. Now, please pay your credit cards, everybody. Not saying not do that, but there is a difference in score, and that is why sometimes we see a difference between when my Credit Karma says I'm at 750 and I pull it and it's a 710. It's probably something in there with they missed a car payment 18 months ago.
Yeah.
They had digged them.
Got it.
Okay.
Thank you so much for taking the time to watch the video. I hope that you can benefit from some of the information and, hey, maybe avoid some situation with some stories that we told today. If you'd like Todd's information, we're going to put his link to his information below. Also, you know me, I'm the Bald Realtor. I need you to take the time right now. Come here a little closer. I need you to subscribe so that you can get all this awesome content at your fingertips. Take the time, subscribe today. Have a blessed one.